Hello, everybody. I'm your boss, and welcome to another daily plan stream. We'll be kind of reviewing what's happened so far today in the markets and review what our expectations are for FOMC and the Bank of Canada tomorrow. It's going to be a busy week, a lot of FOMC meetings. Yesterday there was no stream, no week ahead outlook stream. I got all this momentum when I was finally having some time to get some programming done over the weekend. I decided to spend yesterday also getting some good programming done. I was having this is like enjoying myself. Okay, I'm having some good fun here programming. I should just keep that going. And I'll definitely be getting back to that after the stream to make some new indicators for you guys and update some of the ones that you love. Currently working on some timing dots stuff. Now, let's go ahead and switch over. I got the Aussie dollar up here. As you can see, it took one hell of a beating yesterday, right at the open. That was pretty insane. Let's see here. What data did we get at that point in time? Let's see. I don't see anything too crazy. There's the NAB business confidence. Yikes. Yeah, that was forecast to come in higher and it came in lower. That business confidence must have been really horrendous and really bad on this tells me, without even looking at the business confidence index and the report on it, that there's probably inflation expectations are not being well anchored, as the central bankers would say. So we'll go ahead and if I can find the report, I'll bring it up on stream for the NAB business confidence. Let's see here. Or business conditions. Yeah, some websites say business confidence, some websites say business conditions. All right, so I'm on the NAB website. Right, so let's see if we can find this easily. Oh, yep, there it is. NAB monthly business survey. All right. Conditions in retail here for you guys to see too. So this is the reason why we're looking at this is because of this big red candle. This is, 33, 35, 34 pips, depending on how you round it, straight down in the span of an hour, which means, hey, this particular event is important. So let's go ahead and just review if there's any useful information in here. Overall, the survey continues to show some resilience and activity, but also that business continues to face a challenging cost environment amid slower output price growth in late 2024. And then from the chief economists, whenever you see chief economist or head of research, those are like tags of quality. If you see these kinds of people giving commentary, definitely look at what they're saying, because these are the people responsible at these firms like NAB for making the business decisions for that company. So they are like the most responsible people and actionable people at these companies. And that means they're market movers with their commentary. Oh, look, we got some more Aussie dollar appreciation here off these lows. We'll get into the timing dots and the whatnot in just a second, but we need to figure out what's going on with NAB. Conditions remain strong in the service sector, okay, but there was a noticeable improvement in retail conditions, which may reflect a pickup in consumer spending. We have to wait. All right. Confidence rose in November, remains below average. Confidence has been below average since 2023. Okay. Anything else? The uptick in purchases cost. Okay, so nothing too crazy here. I'm pretty sure this is the full survey. This is the full survey. So let's see here. What got hit the most and what grew the most? Business conditions for trading, profitability grew really well. What's that? Flow and orders. I think that's supposed to say flow and orders. No? For and orders? That rose a bit. Still in negative territory. Yeah, so it looks like everything net is improving slightly. I don't see why things would have fallen based off that. But my next best guess is if we go back to the commentary here, conditions remain strongest in the service sector. And then they say something about retail here. Yeah, overall activity measures stay strong. We saw that in the data. Most industries reported an uptick in both purchase cost and final product price growth in the last month. That's inflationary. Labor cost growth, on the other hand, continues to ease, which is disinflationary, despite the outgoing strength of the labor market overall. Okay. Amid slower output price growth. Okay, so there seems to be a bit of give and take on things that have inflationary pressures. So I really am curious what the main driver was for this. Because if we go and check the economic calendar here and scroll back just a wee bit, we want to find... Is there a way I can just... There we go. We can hop to today. Australia. There we go. And by the way, I'm going to turn the music back on. Put it on a low volume. There we go. Australia, NAB, and... Wait, why does this calendar not have the CPI, the inflation data? Where's the inflation data for Australia? Okay, I guess I'm pulling it up over here. Maybe because that was today? Yeah, it's not even there on for today. Yeah, what the heck? Okay. Let's see here. There you go. Australian inflation year over year, trimmed. This is kind of important because we got a few things in the weekly outlooks to check out. Let's see. A lower Australian Q4 CPI today would increase the odds of rate cuts for the RBA. And when we look here across the board from all this economic data, yeah, all these values look pretty good. Now, the inflation rate quarter over quarter, yeah, actually, no, this comes in later today. That's why. If I scroll down here, it should be... Yep, there it is. There's all the inflation data, right? So I just had my timing off a bit. So we're going to have another big move today, later today here on the Aussie. Sometime around... Is that like right after? Yeah, that's right after the open. So within the first 30 minutes of the next daily candle, we're going to have some super, super important data here for Australia. And Aussie dollar, considering we're going to likely get a hawkish FOMC. And by hawkish, I don't mean Powell's going to be, you know, saying, oh, we're going to hike rates, or we're going to be indefinitely on pause, you know, say anything like that. I'm saying he's going to, one of the big bits of commentary over the weekend was, hey, Trump says, I'm going to try and demand that Powell keep rates low and lowers the Fed funds rate. And the last time this occurred, later in 2024, during the election cycle, Powell came out during his press conference and said, "No, the Fed is going to remain independent, and our decisions are going to remain the FOMC's decisions." So with that, yep. With that in mind, sorry, getting a couple of messages here. But yeah, with that in mind, if Powell is quote unquote hawkish, because in the next meeting here, he just comes out, shakes his fist at Trump and says the Fed will be independent, right? If Powell comes out and says something along those lines against Trump, the next thing that's going to show up in the headlines is, oh, you know, the Powell Trump standoff. Who's going to cave in first? Is Trump going to cave in, or is Powell going to cave into Trump's demands? And the truth is that neither's probably going to happen. It's just going to get spun in the media. And because that's just what the media does, you know, Trump can be patient, and we're already planning to have rate cuts this year, right? We're already planning, I mean, later this year, don't worry. And depending on how the economic data actually prints, we could get more rate cuts out of the FOMC. So I'm not terribly concerned about the FOMC and their policy path being too restrictive. The FOMC will cut if they see things are aptly restrictive and they can maintain inflation around where it is, or see it going on a slightly lower path. So let's go ahead, adjust a couple of windows here. Yeah, remember to tell me how the music volume is. If the music volume is overwhelming the voice or whatnot, I could probably turn down like a smidge. Oh, accidentally sent the music back 5 seconds. Yeah, we'll do that. All right. Let's keep going. Let's move on to Canada. So to wrap this up with the Australian dollar, we're getting a big bit of economic data at the open of the next daily candle here. So, you know, be careful, right? The Reserve Bank of Australia is expected to cut at their February 18th meeting, and with 60% odds. So if this economic data, if this economic data comes in lower. Yeah, if this economic data comes in lower, it'll increase the odds of the RBA cutting. If it comes in higher, it'll increase the odds of the RBA staying on hold or doing a cut with a more hawkish policy statement. And then they're expected to skip a meeting, cut at the next meeting. That's that. So for today, which is technically in the next trading day here, we have all this Australia stuff. Yeah, you can see some commentary here from CBA, Commonwealth. Specifically, we expect the RBA to commence a modest easing cycle in February 2025, with our forecast for the fourth quarter 24 trimmed mean of 0.5 quarter over quarter comes to fruition. So they're looking at RBA trimmed mean quarter over quarter right here. The previous print came in at 0.8. Consensus is 0.6. So if they got 0.6 or 0.5, so that's what these guys are looking at. They're looking at specifically this metric right here. Okay. Let's go ahead and put this dude back to which you came. Let's go ahead and now check out the Canadian dollar. So we had to cover that because that's happening like immediately today. Wow, look at that. CAD is just holding up. Yeah. So my expectation was a bit more bullish going into the day, and you can probably tell why just by looking at this chart. If I real quick just make this 1 unit larger, let that refresh. Yeah. So these are some timing nuts. So it says, hey, given this low, if this is actually the low for the day, the top for the day comes in around here. So I was like, okay, that seems pretty straightforward to me to hold long. I am kind of curious why we're getting strength over the last couple of hours here, especially on the CAD, considering we have, if I go here to a daily chart, we have coming up here, and by these things, it'll be a little easier to see. We have tariffs coming up here, right? The 25% tariffs are getting planted over the weekend. We have, including today, 1, 2, 3, 4 trading days left until the tariffs get put on over the weekend. And Parliament is still not expected to come back in Canada until the 24th of March, which, you know, they could decide to come back sooner. If the tariffs get put on, you know, they could decide to come back like late February, maybe early February, if it's really urgent enough. We'll see. But for now, this is what we have, and until maybe Parliament coming back changes that expectation, what I read is that the Canadians were having a really hard time doing any negotiations while Parliament was away, because the Secretary of Commerce and Secretary of Treasury in the United States haven't been confirmed yet. Now, Lutnick still hasn't been confirmed for Secretary of Commerce, but Bessonnet has been confirmed for Secretary of Treasury. So the Canadians now don't have that excuse. They can talk to someone in the Trump admin now about tariffs. And the problem with that expectation, though, is that Bessonnet is pretty pro-tariff. He's pretty on board with Trump's tariff policy decisions. So I really don't see this changing, right? We had some messages out of Trudeau over the last week or so, talking about, how Canada is doing such a great job on border patrol and immigration, to try and puff their chests a little bit on the PR side and say, like, look, Trump is being just a big old meanie. We're actually doing our job here at the border. He shouldn't be tariffing us. And I'm sorry, Canada has a huge border, and there's a lot of Chinese espionage that goes on through Canada. There's a lot of stuff that needs to be done around Canada, security-wise, respective to the United States. This is how it is. There's a lot of other demands than just immigration and drugs that a lot of drugs that come into like the northeast US, a lot of that comes through the Canadian border, because the Canadian border is arguably easier to get through in a lot of cases, right? There's a lot more tech and a lot more security by the southern border. So if you can somehow get your stuff, let's say you get your stuff shipped over to China, and then from China shipped over to Canada, where there are Chinese mafia connects in Canada, then you can send it over to the east coast of Canada and then down into the US. And supposedly that's the easier route to do. You know, it's a longer distance to travel, but apparently there's a higher probability of actually getting your stuff through. That's what I read by reading the reports of, you know, hey, how are these people, how do we, you know, when the government explains, okay, what do we know currently about how all these things are sent around and through the United States? Well, it comes through Canada. A lot of it does come through. A lot of the drug problems actually do come from Canada. A lot of it comes from Mexico, but a lot of the same people running the stuff through Mexico are also in partnership with the people running it through Canada into the US. So, yeah. If you actually read the congressional reports and whatnot, you'd know this, but you know, nobody reads the congressional reports. So, as far as the Bank of Canada decision tomorrow, we're expected to see them cut 25 basis points, right? So if we go back over here and scroll down, here's the Bank of Canada stuff. They're expected to cut with 76% odds currently on the 29th. We can use our little reading format, right? Yeah, there we go. Bank of Canada will discuss potential policy actions if the US tariffs are enacted on February 1st. Parliament suspended. Next prime minister is expected to be elected in April or May. And another rate cut is expected in March with, well, 44% odds. And if the tariffs do come through, we are expecting to see more rate cuts. So that 44% is expected to go higher. And this is why you've seen some commentators, you know, I've heard, you know, a lot of people I know follow Brent Donnelly, and Brent and I have a signed copy of his book, Alpha Trader, here on my desk. Brent's been targeting 150. And I genuinely would not be surprised to see, you know, if Canada tries to enact retaliatory tariffs, because that seems to be the next thing that the Canadian government's going to do is, you know, try and respond in kind. If you read any analysis on tariffs for Canada, I mean, we can just Control F search here. Tariffs. Okay, so US tariffs. In the case of Canada, the economy is diversified enough where crisis conditions will likely not materialize from the US tariffs on Canada, and the Bank of Canada has room to cut interest rates more aggressively to offset the economic impact of tariffs. Now, the Bank of Mexico, does not have the same leeway. Let's see here. Oh yeah, and then we have this extra thing happening on April 1st where a bunch of government agencies are expected to give a report on, hey, here's what we need to do to optimize our trade relations with other countries. Let's see here. Yeah, but it's unlikely to prompt the Bank of Canada to cut rates more aggressively unless Trump follows through. Yeah. So that seems to be the net consensus here. Yeah, everyone's talking about tariffs. Look at this. Everyone's talking about tariffs. Tariffs, tariffs, tariffs. Tit for tat wars. Oh yeah, this is a great chart. This is what I was looking for. A potential spike in U.S. tariff rates loom. The average tariff rate on U.S. goods imported. So, since the 1930s in the United States, since the 1930s, the tariff rate was between 15 and 20%. And then once World War II started, tariffs went down until the end of the war to about 5-6%. Then they rose a little bit during the 60s and the 70s, mostly the 60s. And then they've been falling ever since. And now here comes Trump. We are going back to tariff rates put on about 100 years ago. So, and now this is with the US being a huge, super huge economy. Way larger than it was back here. So this is going to be a lot of money for the United States. Okay. Yeah, a lot of tariff stuff. Oh, this goes ahead and covers what goods are expected to be covered where. You could see source of U.S. good imports. Most of Canada's stuff is industrial supplies. That's what makes up most of Canada's exports to the United States, what the U.S. actually imports. Industrial supplies. Let's see. So, if Canada puts on tariffs, they're going to be putting tariffs on this for the United States. So, U.S. industry and manufacturers might see an increase in their capital expenditures costs. That could be one thing. A combination of U.S. tariffs and retaliatory levies by Canada and Mexico would lop about 2.5 percentage points off the Canadian economic growth in 2025. Yikes. Relative to the baseline. And push the annual inflation up by 4 percentage points. So higher inflation means you're going to have to cut. Lower growth means you need to do maybe some fiscal stimulus, frankly. Unless you get Pierre Poilievre in April, frankly. And he's able to come to a negotiation and an agreement with Trump over the summer, June, July, and have stuff like finished by August. So then Canada can at least have a second year, the latter half of this year to recover. It's really gonna be, Canada's gonna get hit ridiculously hard if these numbers actually come into fruition. Like if these tariffs are on throughout the whole year, this is what could happen according to Wells Fargo. 2.5 percentage points off GDP for the year, and 4 percentage points higher in inflation for the year. That's kind of insane. So that's kind of the bigger picture here going into things, so it's like, okay, we're down a little bit maybe on this position, right? But I go and I look at things through the lens of those outlooks and what's going on politically in France, right? Not France, you know, I am looking at stuff going on politically in France right now. I just had a slip of the tongue because of the Quebec, right? They got a lot of, they got their own culture in their own little micro state there in Canada. Who knows? Maybe they end up wanting to split off from Canada and join the United States so they can be their own state in the United States and have technically more freedoms to do what they want. I don't know. Yeah, exactly. Yeah, good luck with an empty government. There's not a whole lot. There's really not a whole lot that Canada can do while Parliament is closed. I mean, the whole reason why Parliament is closed is because Trudeau wants to give his party, which is the Labour Party, time to elect a new leader because he's stepped down because of a fiscal policy snafu. He's been wildly unpopular, and now they want to, they're essentially trying to front run this guy called Carney, which I couldn't think of a worse last name, because Carneys are generally not stereotyped as good people. You know, it's like whenever you go to a carnival and you play carnival games like Pop the Balloons, or the spray gun game where you hit the target with the spray gun, or throw the rings on the bottle, whatever, those carnival games, the people who run those, if I recall correctly, are called carnies. This guy's last name is Carney. Now, not all carnies are dishonest, but there's a reputation that'll, you know, there's a lot of dishonest carnies out there. It's a kind of a stereotype. I don't know, I might be getting my references wrong here, but that's what I'm thinking and imagining when I hear about this guy. And then you realize, oh man, this guy was at the Bank of England? And then you have all these people from the Bank of England and in politics over in Great Britain saying, oh, Canada, you should really be careful about putting this guy into office. That guy did some really bad policy decisions at the Bank of England. Maybe you should reconsider. And also, the guy is very pro carbon tax, very pro green policy. You know, don't get me wrong, there is a time and a place for that. It's just it hasn't been good enough. Green energy and the promise of green energy was never fully met. And, you know, people can come up with all sorts of excuses. The point is just that it wasn't met. Not that it won't get met in the future. It's just, the technology is not at where society needs it to be in order to actually replace everything else. Also, it's, if Canada were to go fully onto green energy, it means they could export more of their oil, which, you know, that's pretty good. It means more exports, they could get a bit more revenue, be less dependent economically on oil, at least for their own energy. But you know what? Oh, It's just the tech isn't there quite yet for green energy and Canada. It's just not quite there yet. So we're gonna have to. It's just getting pulled back. Also, a lot of the green energy stuff has been fairly corrupt. Like there's people making claims that can't really be met by green energy, and then that's leading into overspending on projects that don't actually see any return. It's really sad to see, and it gives projects that actually do provide some benefit a bad name. I can think of a lot of different examples in life where that is the case. But when it comes down to Canada, where it's at right now, it's very Pierre Poilievre, he's the most popular guy right now in Canadian politics. Not only that, but there was a huge mega survey done in December, I believe, last year that I reviewed on stream. I'll just tell you the results here. When the Canadian, it was like thousands and thousands, this huge poll. They were all asked, hey, who do you think will win the upcoming, the next Canadian election, the one for next year here? And they overwhelmingly said Pierre. And then the next question was, okay, what kind of relationship should Canada have with the United States? Should we have a good relationship or an adversarial? And everyone was like, oh, we should have a good relationship. And then they asked, okay, if Donald Trump becomes president, should Canada have a positive or negative relationship with Donald Trump? And 60% of the Canadians polled said, we need to have a good relationship with the United States and Donald Trump. Like, we need to be able to work with him. So to say Canadians, don't like the United States or have animosity towards Trump or whatever, it's just not true. The most likely thing that happens for Canada politically is Pierre gets in and a deal gets done to figure out how to get rid of these tariffs or at least reduce them. And we'll see how hard Trump pushes Pierre to make Canada a new state of the United States. We'll see how hard he pushes on it. Maybe Trump is dead serious on that and will leave these 25% tariffs off. 25% tariffs on, and only take them off on the condition that Canada becomes a state. Like that. What can Canada do at that point? You're gonna be stuck. You're gonna be stuck with this. Like, this is gonna be, it's like, oh, either become a state of the United States or have your economy effectively come to a halt. At that point, there's going to be a growing, like, smaller political movement in the United States, in Canada, saying, hey, our economy is getting hit so hard, it really seems like we are that dependent on the United States. If we really are that dependent economically, we might as well join in on their economy so that then we can continue to grow instead of being treated as a separate country and receiving these tariffs. And it's just to join for purely economic reasons. Like, that would be a thing I could envision occurring. But, we can envision a lot of things occurring. There's gold in the walls, right? All right. Let's head on over to maybe, let's see, what's moved a lot here. Let's go to our Forex heat map here. So the US dollar is gaining strength pretty much across the board here, except on the Canadian dollar. It's gone up against New Zealand, pound, Aussie, euro. It's gone up the most against the Australian dollar here. But as far as pips go on the day, it looks like we've had the largest dollar move against the pound currently. And then there's also the yuan, right? That's, you know, it's apparently moved 200 pips, but that's yuan. Let's see here. Dollar CAD moved, or rather dollar yen moved 70 pips to the upside on today's candle. Well, I'd say our expectations were partially met, right? Down, up, then over here to a close. Yeah, so it seems like expectations are roughly falling in line here. At least also timing-wise, right? We expected a rotation to occur around here. Let's turn on the timing dots real quick. Oh, that's right. We got to 0.2. Expand that just a tad. Go back up to here. And real quick, future highs and future lows only. So it should get rid of all of these. Yep. So if we're going to make a lower low this week, it's most likely going to be in the last few trading days here. Literally on Friday is when most of this comes in. So if we're going to be making a lower low, it's going to do something along these lines. If we're going to see, I mean, there's really only a handful of dots here. Like, there's not that many samples. So either this is the low for the week and we go to here, and that's pretty much all the data we have historically. So for as far as dollar yen goes, it's like, okay, maybe it goes up to here and then that's that. But considering we've already fallen this far, and yeah, things are just not looking so hot. Let me go ahead and turn on the season odds here. And turn off the timing dots real quick. Yeah, most of the closes are up here. I still wouldn't be totally, considering FOMC and all that and the tariffs, I wouldn't be surprised to see us net end up closing the week above central pivot. Like, it's a very general thing for me to say, okay, close above central pivot, but that's, you know, I'm calling for central pivot or 0.5 here on my expectation. So, you know, around 156 on the dollar yen. Looks good. Anything else? Yeah, so there's also the pound. Yikes, yeah, either this thing's going sideways for the rest of the week, or you're going to see some spikes on this thing. Not good. Let's go down to a 6 hour. And let's check out some timing dots here. Well, if that is the top for the week, again, most of the lows come in towards the end of the week here, or there's like a cluster right around there. There's a little bit of overlap, a few lows around here. This is the day we get FOMC, but considering our expectations for FOMC, you could probably see follow through into the following day pretty easily. Yeah, CAD just hasn't moved, right? It just hasn't done a whole lot of anything. I mean, other than the gap up going into this week, right? And a lot more on, if I could just hide these drawings. and a lot more dots to the upside here than there are dots to the downside. And again, most of these dots are on the Thursday or on the Friday. So if you are expecting to see lows from here, and the low probably comes in Thursday, Friday. And yeah, again, most of the tops come in around Thursday, Friday for this particular set of data. Looks like a lot of the tops come in actually around 145.8, which is about 200 higher from here. Yeah, there's a lot of tops that come in around here. And then there's, of course, this cluster right here. But if you're looking for continuation into Friday, there's a bit more skew to end, like, you know, above 200, closer maybe to 300 pips on the upside. If you get a, you know, particularly bad, a particularly dovish Bank of Canada statement, and you get a particularly hawkish FOMC statement. Those are just the risks. And then, of course, any combination in between can put downsides to those expectations, right? Like, okay, maybe around here, if I can just get the drawing around here, that can be reasonable, which is about 150. But, you know, I think that'd be the net. That'd be the nominal expectation I have. And you can see that's actually why there's two arrows here. This is the nominal expectation here. And then I'm like, hey, if things get, you know, really hawkish during FOMC, I could see us moving to here. And you can, yeah, you can see the drawings right there. Those are the expectations. And the good part is, because I draw these arrows, you don't have to second guess. Hey, what was Joe thinking? You know, way back over here. I'm like, hey, this thing's going up, up, and away going forward. Yeah. And then there's the Trump threatens 25% tariffs right here. Boy, has that been a ride or what? All right. That all said, I've pretty much covered for today and the day ahead. Remember, later today we are getting Canadian dollar moving stuff, and the low is probably not in for the week, so I would not be totally unsurprised to see these lows getting hit. I mean, there's a lot of lows down here. You would need a really hawkish FOMC to move the Aussie dollar like this far lower. Like, that's quite a move to ask. But considering the number of dots here, I'd be on the cautious side of these events. Boss bands. Oh yeah, I'll go over these sometimes, but this is a free indicator. This has been around for a very, very, very long time. It's a trend following and technically a range bound indicator. You can use it for trading ranges with a different set of rules for trading trends. And right now this is telling me, hey, this is probably gonna trade around the 61, the mid 61 handle if we continue falling really aggressively going into the FOMC meeting. Yeah, sorry it took me a few minutes to get to your question. But again, okay, we have coming up here very, very shortly in like later today, the Australian CPI, and we just reviewed, hey, there's institutions that will be watching that, and if it comes in lower, we should be expecting the RBA we will see an increase in the odds of the RBA's likelihood to cut. So just keep your eye out on this. And then, of course, Bank of Canada, USD CAD. This thing's probably going to go up, and away, because Canadian politics is just a mess. Again, I went over that for about 20 minutes. Don't we have something with the... I think we already had BOJ, right? Yeah, we already had BOJ. We have New Zealand also in February, but we'll talk more about New Zealand when we get there. Right now, things are actually still pretty dovish for the RBC. Essentially, the correlation right now between New Zealand and Australia are pretty tight when it comes down to how they respond to USD specific moves. USD seems to be the primary driver here. And yeah, it does look like the New Zealand dollar is very much in the same boat as the Aussie dollar. Very much. So I'll go ahead and ask everybody who's made it this far to leave a like on the stream, and I'll be on tomorrow covering the Bank of Canada and FOMC meetings live. And I'll be hanging out in the Discord chat. I'm not going to be doing too much programming tomorrow. So today I'm going to be more or less away, but I'm still going to be hanging out, responding to messages, posting news and stuff in the Discord today. Right? Plan the Profit Discord. We've been doing a lot of freaking research, man. This Trump Watch thread has been a lifesaver at times. We got a few movements out of the US dollar short term, and following Trump's speeches has helped so much in not getting surprised, because at the last speech that Trump was having, he went on and talked about tariffs for like half an hour. And that ended up moving the US dollar stronger just off that. And it's not like, oh, here's the itinerary of everything's he's going to be speaking about at his next speech. Like, no, you just have to know when he's speaking and be listening to it in case he says something. And if you don't have the ability to listen on demand whenever Trump is speaking, just click over here. There's still instructions here in the announcements channel on how this Trump tariffs and Trump watch thread works. So just go to the announcements channel and you'll find the quick link to here and how to follow it, how to get notifications from it. This thing's really been a lifesaver. But then if you click on research forum, there's a bunch of other threads for developments and other things like Trump's cabinet, the thing with BoC, right? And if there's any replacements in Trump's cabinet, we'll be watching that. The Russia-Ukraine war, you can see a bunch of the Duran videos. And then all these elections. If you want to focus just on elections, you can hit this little tag here, elections. There you go, Trump's second cabinet, German federal election, Canadian federal election, the French federal election, the UK local elections, the UK general elections, and the Japanese House of Councillors, Australian federal, like, these are all important market moving events that can help set fiscal policy in all of these countries. So all these things need to be watched, and if you're not familiar with any of these things, well, that's all well and good. That's fine. Just you can literally read these threads and get caught up and know what you need to know if you're exposed to any of the currencies of any of these countries. Like, this is just a collaborative research forum. So once you get caught up to date, you can then be on the lookout for any news and share whatever you find in here and contribute back. So with all that done, I'll go ahead and say thank you all for watching, and I will see you guys in a bit.